Today we're going to talk about the challenge of construction financing for townhouse developments. So let's talk about three challenges. One would be the loan to value. Two would be the sales of the units, that are being built. And number three would be the timing of the draws, so a draw schedule. So the first challenge, the loan to value. Most of the times lenders would like to be at around the 65% loan to value range. So when we talk loan to value, we've got two challenges. Most of the time the development needs higher than 65% loan to value, that's one. And number two, how do you really assess the value? You know, when you're at the beginning or where you're in the middle, what is the real value of the project? So that is something where, a borrower may really want 75% loan to value. The lender feels much better at 65% loan to value. So sometimes we work, depending, and we give the merits of the deal. And here's why a lender should feel comfortable going, maybe 70%, or if it's a great location, we may be able to even get it up to 75% on a smaller project, given that it's a great location, strong builder, and the deal itself makes sense. The second challenge being the sale of the units. Now, for a lender, before he starts doing a construction draw, they like a number of the units to be sold. Construction lender doesn't want to be giving somebody, a large developer, for instance, that's doing 50 units, 60 units, letting them build them all without having any of them sold. A lender likes to know that there is a strategy that once these are sold, then people will be buying them and there'll be closing dates and then the loan will be paid down. So, and usually the number of units can be anywhere from, and when we talk about A lenders, the number of units are higher. So the number of units would be, let's say, 70% for an A lender. And an A lender, not only do they want to know the sales of the units, the percentage, but they also want to know, get some verification of the sales. They probably would want to see the offers. They want to see, maybe even sometimes the approval on the mortgage for the individual buyers. So the sales of the units being the second challenge. The ways to get around that, for instance, a B lender maybe would take a lower, maybe a 50% sales. If it's a smaller development, and we do have sometimes where a builder says, you know what, I'm only building 10 townhouses, so I'd like to kind of build them almost on spec, maybe have one or two sold. And so quite often we have private sources that would go along with that, especially if it's a good location, and again, if the development makes sense. So the third challenge would be the timing of the draws. When we get the loan approved, now you start building. Now, as you move along and they give you draws, usually the lender likes to hold on to, if they approve a certain amount, they'd like to hold on to an amount that would be equal to the amount required to finish the project. So that is usually a challenge. Quite often, the developer or the builder is building and he needs a certain amount of money to keep the project going. And then you'll have a lender that says, well, I really can't give you all that money because I need to keep this money left, because we've sent out an appraiser or an engineer and he said that you need, $1 million to complete the project. So the timing of the draws are very important, and that can be a challenge. If you need any more information, give me a call at 416-464-4113 or send me an email. I look forward to speaking with you. Take care.